I have never been so sick to my stomach of the lying and fibbing that goes in. And anybody who's done any mathematics understands this, except they're not allowed to say anything because Ray Dalio gets on TV and says he doesn't think the solution is going to be Bitcoin, and then describes what he thinks the solution is going to be, and he describes Bitcoin. Like, this is so asinine, and I've never seen anything like this. So we are living in clown world 3.0. Okay, and the people running this clown world need to be challenged by the people who understand mathematics. And it's not difficult math, guys. It's grade 11 math. So please keep challenging these people. They're lying through their teeth. It cannot be solved any other way.
Hey guys, welcome back to the channel. Today we have Bitcoin maximalist Greg Foss discussing the massive debt spiral we're seeing now, as well as the Fed's recent policy on inflation and how Bitcoin will be a great alternative to solve this crisis. Foss also highlights the debasing nature of fiat currency and says the outcome of the Federal Reserve is dependent on the strength or weakness of the US dollar against other global currencies. The Fed also plays a big role in the direction of markets and assets, and Foss notes that a weakening US dollar leads to a rally in risk assets like Bitcoin and gold. There is also significant concern that the Federal Reserve may face pressure from rising inflation due to the strengthening of oil and other imported commodities. With the current state of global debt, and the actions being taken by the Federal Reserve to address it, Foss believes the only solution to the runaway debt spiral is through infinite quantitative easing, and that the Fed will eventually have to admit to this. Let's check out this interview with Greg Foss as he talks about what's coming to the stock and crypto market in 2023 and how the Fed will play a massive role. If you enjoy the content we do here, don't forget to hit the like button and subscribe to the channel. Let's get right into the video.
The world has turned into a very short-term oriented in terms of the investing time frame. Everyone is a trader. Everyone is got FOMO in one direction or another. A lot of this rally, in my opinion, is driven by sector rotation coupled with your short covering. So what you have is a value stocks had a bid going into the end of the year, and everyone was selling NASDAQ. But when you get offside on that, you get afraid of not being weighted to your benchmark. You tend to cover some short covering in the long duration assets, which are, you think of tech stocks. But I think I can break it down into one simple trade. Larry, you tell me what you think. It's all a function of the DXY and the strength or weakness of the US dollar relative to other global fiat currencies. As you know, DXY topped out around 114 and had been on a decline since then. That was coupled with some stabilization in the equity markets and certainly risk assets, emerging markets. But coupled with that is going to be a very different outcome for the Fed, because as the US dollar weakens against there's only 6 of them in the basket. Primarily the euro and the yen are the two main or components. You'll have oil, which is priced US dollars. As the US dollar weakens, oil will strengthen, and that'll put pressure on the Fed because of inflation. So I like to break it down in terms of the DXY. When the DXY weakens, you see gold rally, you see risk assets rally. To an extent, I think the recovery in Bitcoin is a function a little bit of both DXY, and I don't believe it, but I don't believe in it, but the market does, in a risk-on attitude. So if I had to say one thing, I'd watch DXY as an indication of whether we're on the wrong side of the trade in the long term or not. And the DXY is, I need to stress to everybody, all fiat currencies are melting cubes. It's just a relative rate of decay that is represented in the DXY. So the DXY means that the US dollar is not, it's certainly debasing, and it was debasing far less severely than the Japanese yen and the euro. But since the Japanese moved their peg on their yield curve control, that has caused the yen to strengthen. So we all know that it's a race to the bottom in fiats, but the DXY measures it as a relative rate of decline. Everybody knows when the DXY weakens, risk assets get a bid. So that covered with short covering. Don't overlook the long term. Hard assets win and DXY weakens.
Greg also mentions the decline in the US dollar and points out that it's a sign of its debasement compared to other currencies, and says that when the DXY index weakens, risk assets are bid up and hard assets win. He believes that the recent recovery in Bitcoin is a result of both the DXY and market sentiment. Greg suggests that everyone should watch the DXY to determine whether the market is on the right or wrong side of the trade long term.
It's a spiral that cannot be solved. You have to print money. It is the error term. It's the only way of solving this runaway debt spiral where your debt burden is building organically because of the coupon on the debt. Okay, guys? If you don't understand that, you failed grade 11 math. So everybody's running around trying to split hairs. And the reality is quantitative easing infinity, QE infinity, is built into the mathematics. It always has been, and the Fed can pretend they're going into QT for the short term. It doesn't work in the long term. So there will be a solution where the Fed has to blink and admit, we have to print forever. So don't take your allocation to Bitcoin out of your gold basket. You take your allocation to Bitcoin out of your fixed income basket, because fixed income is a contract, and it's a debasing contract. It's built in fiat, and fiat is programmed to debase. So what are you going to take your allocation to Bitcoin? I don't care if there's Bitcoiners that don't like gold bugs and gold bugs who don't like Bitcoiners. You guys are missing the bigger picture here. It's so much bigger than the combination of gold and Bitcoin. It's about a Fed projection where they think it's normal that they're going to be able to borrow 4 times their revenue base or their GDP. That's going to solve this debt spiral. This is what blows me away, Sam. We have never been here before. The point of no return is past, so we cannot compare this anywhere in history. It started with a financial crisis. We rescued the system. First time in my life was the Latin American debt crisis. That's the first time we kicked the can down the road. Then it was long-term capital management. Then it was the great financial crisis. And then it was COVID. And now it is over. You cannot compare this time to any other time because our debt burden is just so darn large. The mathematics don't allow it to be solved any other way. So we can look back to different periods, but the reality is we've never been here before in terms of a global debt burden that is so large compared to global GDP. And you can break that down by country, and you could say, oh my goodness, here's the crazy thing. In the end of World War II, the USA had a debt burden, just the federal debt, that was right around 100% of GDP or 1 times. Hey, the USA was a trade exporter then, a global exporter. It doesn't work when you are a global importer. So again, there's no other time in history, because we have just been so irresponsible in building the debt burden, you can't compare it to any other time. I don't want it to go kaboom, but unless they keep printing forever, it goes kaboom. So there's one solution: infinity, QE infinity. And we're going to pretend inflation doesn't exist, because we're going to rewrite the definition of inflation to bring it down to this mythical 2%.
One of the most important points Foss mentions is the importance of considering Bitcoin as an investment, as it may provide a hedge against the debasing of fiat currency. He argues that the current situation is unique in history, and the solution cannot be compared to previous periods. Greg believes that the Federal Reserve is lying about the true state of inflation, and soon the definition of inflation will be redefined to downplay its impact by the Fed. He encourages people to challenge the authorities and understand the mathematics behind it. What do you think about this interview with Greg Foss, and what we can expect next with Bitcoin, the crypto market, and the Fed's impact on inflation? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.